The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
A group of Vancouver developers, including BD, Cressy, Intercorp, Polygon, Strand, and Westbank, have signed an open letter calling on the Government of Canada to revise the foreign buyer ban due to its effect on the pre-sale market.
Very funny at the time when developers and reports were saying that in the heyday of the market, when it was a bull market from 2015 to up until COVID, foreign buyers did not account for much in the real estate market. And for those who said that, were labeled racists at the time, if you remember. And it's funny how the world turns, how all of a sudden we have a foreign buyer ban now. Welcome to another episode of the Canadian Mortgage Show. Alex Pang here, alongside with my co-host Alex Shanks. You're listening to episode 50. How you doing, Alex?
I'm doing pretty good, man. Episode 50. We're almost, you could say that I think we always get confused. Are we at a year yet? Or is it when we hit 52? I have to go back. What was the first date that we actually did our first episode? I feel like it was September, wasn't it?
Yeah, I think we did our first episode the first week of September, and we did take 1 or 2 weeks off during Christmas holidays, but there were weeks where we did multiple episodes and all that stuff. But how about for our purpose, we'll celebrate 52 as our 1 year anniversary.
Yeah.
But then once we do 100, 150, we'll celebrate those milestones. How about that?
That's enough. Which is, it's a bit crazy. It honestly doesn't feel like it's been a year. I'll tell you that it doesn't feel like we've been doing it for a year yet.
Yeah, I know. It's just like, honestly, this is almost like raising kids. We just go week by week, day by day, and then hey, what's on the docket for each week, and we got to talk about this. Let's bring in guests and all that stuff. And hey, we're now episode 50. So
exactly.
This has been an amazing ride. Can't wait to keep this going. Let's get it to 100.
I think we could say that to be in the top 3% of podcasters, you have to do 15 episodes. Most people cap on at 15, and then that they just never give up. So we can say that we're in the top 3% there, Alex.
Yep, we got staying power just because we don't quit. Yep. But how's your summer been, Alex?
It's been pretty good. Everyone know I did talk about I injured my knee a few weeks ago wakeboarding. It was getting a lot better, actually, to be honest, Alex. And then on Sunday, I decided to go and play some baseball. I wasn't doing anything crazy. I was I'm just gonna walk around, and I freaking slipped on a base and really messed my knee up. And so it's much more swollen now. It had a pretty nasty pop, and so I'm hoping it's nothing major now.
Oh gosh, did you have cleats, right?
No, I was wearing this was a straight fun game. I wasn't even running after balls. I was standing, I was walking, and I freaking slipped on a base.
Man, you are getting old and clumsy.
That's it. Yeah, it's not ideal. I did buy a dirt bike on Sunday as well, so I got to ride that for a little bit till I got hurt.
Yeah, I saw on social you had a mini little dirt bike for your sons or your kids, and then you need one for yourself, and living the living in the backcountry.
Yeah, that's I get to dirt bike right from my house. It's pretty awesome that way, and that's kind of the difference of living on the island compared to the city.
Absolutely. Well, we have a jam-packed show. Let's get right into it, shall we?
Yeah, let's do it. I'll let you start us off here.
Yeah, so the U.S. inflation report came in for July. It did hold at 2.7%, but core inflation climbed to 3.1%. Now, it's driven by service costs and tariff passing through. Now, at the same time, we have weak labor data and downward revisions, keeping the case for a fall Fed rate cut very much alive. We are been hearing rumblings. Even a lot of times when you hear inflation rising, you think rates will rise, but we're starting to see cracks in the wheels now in the U.S. economy. And we've been saying it all along, it's going to happen. It's going to happen. I feel like it's reports are saying that's starting to happen, and the Fed may start cutting in the fall. And I've said in weeks past where we've dropped enough because we've raised enough from the states that we've been holding for a good what 4 or 5 months now, Alex. You would say,
Yeah, I think these
and
last two or three announcements we've held.
yeah, and we're probably going to be returning back to we will make a move when the Fed does. So,
Yeah.
um, so buckle up,
And that's, I
folks.
mean, it'll be
If
interesting. Like, it's obviously we got the job reports, which is what like started the more uprise, the ruckus here in Canada that hey, rates are going to come down more because the job reports were so bad. The only thing is in the last days, like the US inflation, like with that core increasing, that's not like again, that's what the banks are looking at is obviously we know that we're all in a recession. They don't want to talk about it. But if inflation keeps going up because of the tariffs, which everyone that voted for Trump, everyone that said he was doing it because I'm going to bring the cost down. He's actually been driving the costs up on everything, and so I mean he hasn't kept his word there, and that's just where till some of that data changes and like as long as we know okay is this from tariffs as long as that data is concrete, but if not, like I don't know when they'll be able to cut because we know that if inflation takes off, we're in a bad spot.
Yeah, and I mean, from an economic perspective, tariffs are inflationary because you're adding cost to goods and services, and when you add cost to them, it goes up, and that causes inflation. Um, but yeah, I mean, speaking of tariffs, the U.S. tariffs on Canada went up to 35% as of August 1st. So today we're recording on the 14th, so it's been 2 weeks now. Um, Honestly, I don't know if I've seen anything pass through yet. I think the biggest thing's been affected is what? Manufacturing, right? You believe,
Yeah,
Alex?
yeah. Yeah, that's yeah, I don't think anything on our side, and again, like, it's we have to remember it's the US people that are gonna be feeling it, and which I have been seeing some posts on it is like coffee for some of them went from like $12 to $19 because other countries are having the tariffs and everything, and that's where we're not gonna feel it all that much. It's mainly the US people buying our goods. That's who's gonna really see the prices.
Yeah, and it's not just the U.S. tariffs on us. China hit us
Yep.
with a 75.8% tariff on canola. Now, this was in response, dating back, several months now of our 100% tariffs on their
Yeah.
EVs. But yeah,
Which
they've
is
hit us
fair.
back.
I'm fine at
Yeah,
that.
and
To me, that is a completely fair thing. Be like, hey, you want to charge us 100% here? Okay. And I mean, they're not charging 100%. They're only charging 75. So it's not like where again, Canada went with that against China because the US told us to do it. And it's like, well, should we have done that?
yeah, and exactly, and so far our liberal government or Carney-led government, we have no talks, no nothing, and they're not even in government right now. They're off on vacation while our country is slowly going down the toilet with what's going on. So I don't know what's happening.
Yeah, and that's where it's I mean obviously we can see that the Canadian retail sales shrank by 1.1% in May. And I mean there was a lot of stuff like Christmas time, everyone's buying and selling, and as we got more into the spring, like the market was just took a turn. It was like, well shit, like our the economy's not doing good. So people are spending less money. Now that where they're spending less is consumers curtailed car purchases, which totally makes sense to me. Spent less at supermarkets, convenience stores, and alcohol. I think that's like amazing to see that alcohol is finally actually going down in purchase prices. Because man, since like COVID, what has the increase been? I think it's been like 30 or 40%, like the purchasing there, like just crazy numbers.
Well, yeah, when people were stuck at home and stuck when, and we all heard about separation rates going up during COVID when when you're stuck inside, stuck with, if your relationship's already rocky and you're spending more time with them, then more tensions arise, separations, and I can see people drinking more because to cope and all that stuff, and especially with what's going on with lockdown, and I guess now, you know, when you think back, man, like COVID lockdown, that was like it was 5 years ago, but it was like a weird dream that we had, right? Where it's a weird time. We had to check our news, stay home, stay safe, mask up, everything. And yeah, it's like life has returned to normal again. And I guess people are going out and things are expensive. So people are curbing back on discretionary spending for sure.
Yeah, well, I mean, like, some stuff is just so crazy. I mean, like, I went to Subway not yesterday, the day before with my son. I'm just like, holy shit! Like for two subs, it's like $30. It's like I remember going to Subway to get two $5 sandwiches, and I'm like, I'm good for lunch and dinner for $10.
Yeah, it's not the case anymore. I mean, here in BC, our minimum wage is what, 17.85 now, and at the time when they raised the minimum wage, it's like, yo, hoo hoo. But guess what happens? Every single thing on a food menu or a grocery will go up in lockstep. Your McDonald's meal is now, 12 to $15. Your Subway, like you said, I
No,
had
no,
a foot long.
like
It's
18 bucks
14
for like
bucks.
like
Exactly.
18 bucks for like a
Yeah.
McDonald's meal. It's for me, like I used to like we would used to get McDonald's as like, okay, we're gonna get a cheaper like outdoor. It's the same cost of just getting like Saigon, like getting like Vietnamese noodle. It's not
Mhm.
like and even those have gone up. Back in the day, a Vietnamese noodle was like $10. Where now it's
Oh,
like
less than
19.
that. Yeah. Yeah, yeah. We are dating ourselves, but inflation has gone rampant, and even our guest last week, Andrew, was saying, um, before when minimum wage was lower at 12 or 13, paying somebody $20 an hour is like, oh, that's pretty good. But now that same $20 an hour is only $2 away from minimum wage. So it doesn't buy you now. Now, that same worker, you'd have to offer 25 or 30 to have that comparable attractiveness for workers. So moving on here, speaking of which, of spending less, not only spending less in the supermarkets, convenience stores, and alcohol, we're also spending less on real estate. Now, surprise, surprise, but it's actually showing more in the stats now. And if you can see this on the video side, we are investing more in US stock. So we may not be traveling to the States as much, not buying real estate in Canada, but apparently we're still buying those, Googles, Metas, what have you.
Yeah, exactly.
So
That's and I mean, I just saw Shopify is now like it's the top one in Canada, and it's I mean, again, like it's great to see that where everything else in Canada is just real estate, real estate, real estate.
yeah, yeah. So I mean, if you ask Alex and I, like, should you invest in real estate? I mean, it depends on what market you're looking to buy in. If you're
Yeah.
buying for long term, yes. And especially in the greater Vancouver and probably GTA area, you're not going to cash flow unless you put
Oh
like
yeah,
50%.
yeah,
Yeah. Unless you
exactly.
put 50% down, right? Which
Yeah,
is, if you're asking any financial advisor, it's probably not the best use of your money. So, um, yeah, I can see, like, if I was given, like, let's say a couple 100,000, I probably wouldn't invest in real estate at this point. I'd probably do the same thing and invest in the markets or crypto or
no,
whatever in the meantime.
it's I'm buying real estate, like looking at stuff right now, but it's buying properties that need to be fixed up. There's like,
Yep.
oh, maybe they don't have a tops, they just have one suite right now. Like that is where the value is. But like, yeah, I'm not buying a condo. I'm not buying a townhouse. Like
Oh
I've had a
no.
lot of clients keep recently come to me like, oh, well, should I just buy like a townhouse? It's cheap. It's like for one, you're not even gonna cash flow. Like that's not gonna happen. And like the value for you is yeah, maybe 30 years later, yes, maybe it's worth it, but is it worth like the having to deal with renters where you just get a 4% guaranteed rate of return from your dividend stock and it might even be better?
Yeah, exactly. Like, right now we're in this place where if you're buying a condo for investment, I mean, there's a ton in the market. Sure, you'll get a great deal, but unless you put a lot more down, and it's not the greatest time as an investor right now. But if you can handle it, you have the cash, and you can withstand being negative for a little bit, maybe for a couple of years, then uh, it'll benefit you for sure. Um, Obviously, opportunities abound when there's fear in the market. Right now, there's lots of fear, lots of low confidence means buying opportunities. At the same time, the reason why it's low confidence is the numbers aren't great. So you got to be able to, if you're sitting pretty with cash and you are not, like, trying to make it work and you're really tight financially, then yes, it may not work for you. But if you are flush with it and you can withstand some negative periods, then the long term you will definitely benefit.
And that's where, like, again, it's looking at like a lot of people right now that are buying, like, they are selling condos if they're able to sell it, and they're buying like a detached house, like in Surrey and Abbotsford. I have a lot of clients buying, and they're buying some days 100 to $200,000 below prices. and they're buying a house with rental suites in them, it's cheaper for them to do that than rent. And it's like that's where the numbers really work for people. It's like, hey, yeah, you could just rent this place if you want, but hey, it cost you $3,500, maybe 4,000. You can own it for the same price.
Exactly. Now, while it'd be a different story as an investor, if you're buying to live in, that's a different story. It's an amazing buying opportunity now. Now, a lot of people are especially in our industry, saying, wait till next year. I think 99% of people are going to do the same thing. And if you wait like everyone else until the market improves, then everyone's going to jump off the boat and we're going to see multiple offers again. And you won't get as a good of a deal as this kind of window that we're in right now. So,
Yeah, and again, like, I don't even think of it as a deal. It's just like, hey, does it work for your budget today? And especially when you can get your numbers to work at the similar cost of renting, like that's the biggest thing. Like back in the day when I bought my first townhouse, it was cheaper for me to own than rent. Like that's how the numbers work. We haven't been at numbers like that for a long time. When you can buy a place with a rental suite, you can make the numbers like that. And it's like, it's a no-brainer that even if that home never appreciates whatsoever, if you can own it and have the other person pay down your mortgage, that is 10 times better than paying rent.
absolutely, 100%, 100%. Now, speaking of, this is a show we're talking about real estate struggling. So this is not news for you and I and for the public, but we're just going to talk about it because the reports are coming out. I mean, downtown condo markets are also struggling. Now, a lot of people aren't returning to the office, depending on the company, and some companies now are seeing that, especially during COVID, where they've allowed people to work from home out of necessity. Now they're seeing that it seems like it's okay, and they're kind of downsizing their footprint and able to save money. The national vacancy rate for office space sits at 19%. So commercial, I guess, office owners are also struggling.
Yeah. And that's where it's obviously I mean, lots of places are starting to say, hey, you got to be into the office. Some are like, okay, we'll do a 3-day hybrid and everything, but it's I mean, yeah, we're going to see more people saying, hey, you need to come into the office, or hey, we're going to replace you by AI. Like that's
Yeah.
going to be like that's going to be the answers for people.
Yeah. Yeah. Exactly. What do we have next about credit cards?
I mean, credit cards, this is just talking about like who has them. Now, we obviously know the big five banks hold 71% of the market share. RBC, again, RBC owns credit cards, they own mortgages, they just have everything. They lead with 20.3%. Desjardins is 9%, which is supported by Calabria, which also has a bunch of other credit unions in it. TD and Scotiabank have sizable global portfolios. Now, it probably shrank a little bit after TD got slapped by a massive fine, and they can't
Mhm.
be growing in the US, which that's where they probably would have been able to do more. Now, this is an interesting one. Canadian Tire leads outside of the big five. And I mean, Canadian Tire is like a credit card that I've always seen. And I used to hear stories of my family. Well, they were like back in the day, like self-employed, they wouldn't get paid. They'd go and you'd go into Canadian Tire, take cash out, and that's how they'd pay rent and stuff, is they'd get their cash from Canadian Tire. And then when they got paid, then they'd pay off the Canadian Tire card. And so it's a pretty big card. And
Yeah.
there was a way that they wouldn't have to pay as much interest. Where if you used a regular credit card and you take cash out, you have to pay a bunch of money in interest. Canadian Tire used to have this special where if you did it right in Canadian Tire, you wouldn't get charged as much interest.
Oh, okay. So you're saying is essentially they were just doing a cash advance.
Exactly. Yeah, they were using them as cash
Yeah.
advance at Canadian Tire, where it was just a much cheaper. But it's yeah, that's where I can see, like, I mean, Canadian Tire gets pushed. They've also combined with what I think they're combined now with Sport Check and stuff as well. It's all
Yeah.
together.
Yeah. So I mean, Canadian Tire has done a pretty good thing. I used to actually have a Canadian Tire Mastercard way back in the day as well. And like, if you see here on the graph here, you see Capital One has a good percentage too. Capital One, I believe they are part of Costco now, right? They have
No,
that partnership, or not anymore.
not anymore. They used to have it, and now CIBC has that partnership with Costco.
Oh, I see. I see. Because back in the day, Costco had a partnership with Amex. Then it went over to Capital One. Now it's
Yep.
CIBC. Okay.
And that's now people, just this is the tidbit for people with credit. You need to be very careful with the Costco credit cards, because what happens, And I had a client that had a Capital One. When Costco switched, he had like a $2 balance. A $2 balance, did not know about it. They sent it to collections on him and almost made it so we couldn't get a deal done at a lender because the credit was down below, which to me is just like straight up BS. He never got a message, never got anything in the mail, but he has a new credit card from CIBC. They just didn't pay off the correct balance at the coast at the capital.
Yeah, I do see here, if you're looking at the video side here, balances have kind of grown from 117 to 123 billion. I mean, good for the banks, not so good for the consumers because it's kind of a symptom of inflation happening. Our incomes are not keeping up with inflation and interest rates, spiking the last couple years.
Yep.
Thankfully it's coming down, but it kind of shows that people have been resorting to using their credit cards
Yep.
to kind of pay for life. And like you can only sacrifice so much, in terms of groceries, but in order to bridge the gap, people have kind of slowly taking on more debt.
Oh, and that's again harping on it. It's people that I mean, people are still trying to live the life that we're living before, and they're having to live on their credit cards. Like I talk to people that, hey, when you work in the oil and gas, you do a lot of shutdown work, and so you have a lot of work and a lot of money, but then you might be off for 3 and 4 months. Those people, they're not good at saving their money. They don't put money aside for the months that they're not working. So they rack up their credit cards. They're still living that the lavish lifestyles if they're working and getting $10,000 a week, but then they're racking up their credit cards. And I'm like, well, are you paying off? Oh no, we'll pay it off. I'm like, that's cost you like $10,000 in interest. Like that's just money gone.
Yeah, I mean, just speaking for myself, like for us, we've had to definitely curb our lifestyle. Like, during the heydays of during COVID, our industry was going crazy and nuts. And when, of course, we spent money when we could because we thought worst case, hey, the business will slow down by 25%. We'll still do fine. We didn't think it would drop 75%, especially in our area, in the lower mainland and GTA saw the biggest drops. Now, moving on to the next point here, Canadian home prices, according to Market Mania, uh, seeing the largest drop on record. Now, if you see on the graph here, the prices. Now, this is of course, a national thing. Our prices have dropped 23.5% from the peak.
Yeah.
Now, that's the largest drop. Like it's more than between 2008, 2009, which was a 10% drop from the peak during the global financial crisis. Between 89 and 98 was a lower drop of 21%. And that was what? Was that the .com bubble burst, or is that that's
I'm
before our
yeah,
time?
that's
Yeah.
before my
Yeah,
time stuff. And so
yeah.
that would be, I mean, that's the one where again, I think a lot of people like the 1976 to 1984, that's when interest rates really spiked. Like what was like the at that time the governor general, he pretty much for Canada was just like, I don't like where home prices are going. They're increasing too much. I'm going to murder everyone and just increase interest rates overnight, like gargantuously.
Mm, mm. Yeah, so I mean, the huge question is, like, yes, we've seen a drop, so it's a great buying opportunity. Have we seen the bottom yet? What are your thoughts, Alex?
Well, I mean, I mean, where I live, prices just keep going up. So it's
Mm,
again, it's very different for every place. Like the lowest time for prices was early 2023. Like that was kind of like it went up and then it dropped a tiny bit, and then since then we've just been going back up again. And so I think in certain areas there's probably still room for it to go down. Like Ontario, I believe that there's places there. I mean, what I saw one place that sold in 2020, and I think in 2020 for like 2.8 million, and it's going for like I think like almost 2.2 now, and even lower potentially.
yeah, you know what? You actually touched the nail on the head. I'm actually going to jump ahead on our agenda here. You were speaking of Ontario. There's a graph here
Yeah.
that's showing that the largest drop in real estate values from the peaks of COVID to today. First place is the Halton area, which is
Yeah.
encompasses Oakville and Burlington. Second place is Peel, which is Brampton and Mississauga, and third is the Durham region. And this is all GTA Golden Horseshoe area. So and of course Fraser Valley, where I live in, is fourth on there. York was sorry, Fraser Valley was fifth. York was fourth. So
And
this
yeah,
is
that
not
Fraser
the
Valley same thing had a really big run up. I mean, like
yes,
Abbotsford, like freaking
yeah,
places going for $1 million that
yeah,
are now back to
yeah.
6.
Exactly. All the suburbs that went up during COVID when people were moving out and getting away, wanting more space, the suburbs kind of peaked where we saw this mass decentralization where people were moving out of the downtown cores of the Vancouvers and the Torontos out into the surrounding areas of the GTA. And for us in BC, the Fraser Valley, where I'm seeing it, it is dropping. And I guess would you say, Alex, it's going up because are you seeing people like how people move, like all the money
People
during that
moving
period?
moving from
Yeah,
moving from the island, or now like moving from Vancouver, moving to the
yeah,
island.
yeah. Because we did
Just
we
people.
did experience that period where money from BC and Ontario was flooding into Calgary, and it looks like it's pulling back now. And do you feel like it's almost like that money from the mainland is coming over to the island now? Is that what you're saying?
Exactly. Yeah, and that's where, yeah, and there's just, I mean, it's so many people are able to still keep working remote. Like a lot of these ones are, but I mean, hey, what happens when they get called back? I do know people that moved from the Squamish and North Van area like 6 years ago because they're like, oh, I can work remote and everything. The prices are so good. While they then got called back to work in the offices for, I mean, a year before COVID happened. But then they were like, shit, why am I even living here? Where, of course, if you're able to make your work here work, then I mean the prices are, you're starting for like a really nice house is 800,000 compared to 1.5 million.
Yeah, so if you look further, if you look in this graph here, the Toronto here saw a biggest drop from the peak, 200,000. Greater Vancouver, not as much, 120,000. So
Victoria had a
yeah,
126, which I did see at a few places there. Again, like it's places that were going 400,000 over asking. Like to me, anywhere that you saw that was going into the multi digits of over asking, it's like, whoa, that's not gonna, that there's
yeah,
something gonna go wrong there.
yeah, exactly. So like the ones that seen the largest gains will see the largest decreases. Now you see Calgary and Edmonton, they didn't see as much movement. So they haven't suffered as much there. So
Yeah.
yeah,
But that,
you
like
know,
Calgary and Edmonton, like they've already like Calgary's dropped a little bit from here, but also like there's certain places in Calgary that they had massive drops in 2015. I mean, people lost like hundreds of thousands of houses due to oil. Like some people's homes just came back to the same price in 2023. And so that's
Mhm.
where it's every market. Canada's so freaking big. It's different on every single market. Like we can't say, hey, the real estate is just down, because some markets it's completely up and other ones it's bleeding.
Absolutely. Real estate in general it's a regional thing. Now, nationally, yes, because of course Vancouver and Toronto kind of lead the headlines. Um, but yeah, don't just listen to the headlines. Listen to the experts in your region. How the market is going. We do have a lot more national stuff, but we do have some local stuff we want to touch on that I was telling Alex we need to touch on this episode. So let's jump into the BC stuff.
Yeah, let's do
So
it. And so, I mean, we got a group of Vancouver developers, including BD, Cressy, Intercorp, Polygon, Strand, and Westbank, have signed an open letter calling on the government of Canada to revise the foreign buyer ban due its effect on the pre-sale market. And so, they're just not happy that stuff is not. I honestly, I don't even know if that would bring it back. To be honest, like I don't know if that is the thing that would drive it. I mean, yes, they'd get some sales, people just don't want to live in them. They don't want to rent. And it is the Airbnb is like really affected in the Vancouver area, because it's like, well, why is someone going to buy a 400 square foot condo? Can't have a family live in it. Can't really rent it long term very good. It worked as an Airbnb for short term people in and out. But that's like all it worked for.
it's almost like very funny at the time when developers and reports were saying that in the heyday of the market, when it was a bull market from 2015 to up until COVID, oh, foreign buyers did not account for much in the real estate market. And for those who said that were labeled racists at the time, if you remember. And it's funny how the world turns, how all of a sudden we have a foreign buyer ban now. And you can see in this graph here in the Greater Vancouver, unsold new construction inventory is up close to, up close to 13,000. Now developers are struggling because they're finally admitting that they built these units, right, for foreign buyers not meant to even like live in, and just to park their launder their money maybe, or just to park their money. And it was a model that worked until the music stopped, until Airbnb got banned, interest rates spiked, and the market, we're going through a cycle in our nature now. Now,
Yeah.
what the developers um are asking um, is to modify it to similar to what Australia is doing now. So
Yeah.
Australia is not is not outright banning it. So they're limiting their foreign buyers to only brand new pre-sale or vacant land. Now the vacant land has to be developed within 4 years, but they're banned from purchasing resales. Okay.
Yeah.
So in other words, lighten up the foreign buyer ban in Canada to model like that of Australia, and allow foreigners to buy new condos, because we know those are the only ones that are willing to buy at today's high prices.
And that's, I mean, like foreigners can still buy vacant land. Like they're still allowed to buy that in Canada right now. It's just, it's not the pre-sales. Like that's just what they're not allowed to buy in any resale, but they are able to buy vacant land, which I'm starting to find we are getting on the commercial side more people looking at that. They're like, oh, well, I'm just going to buy land and I'll build a house then.
Yeah, exactly. Or this whole time they could buy commercial as well. Commercial isn't part of the foreign buyer ban, but that's not my purview, so I don't know too much about it. But I mean, from a developer standpoint, that idea makes sense, because because the funding model is, you need to pre-sell like roughly around 60% in order to build and to actually obtain construction financing and release the next wave of funding, in order to break ground, do the foundation, do all that stuff. We want more housing, and we need more capital, so I can see it from their point of view. The only problem is they're the only ones that see it that way. The mass general public, the optics couldn't be worse.
Oh
What
yeah.
fueled
Yeah.
real estate? Yeah, what fueled real estate in the last, I would say, what, 15 years or even longer before our time in the industry, um, and the meteoric increase in values, especially in the GTA and Lower Mainland, and they want to bring it back.
Yeah.
Like that would
And
be
that's,
political suicide. Would you say?
oh, exactly. Yeah, that's where, yeah, BC. Yeah, they won't be allowing it unless unless it's a very last ditch effort. If everyone's like, okay, maybe we do, but I mean, I don't even know if that would help it. I mean, maybe it would boost sales by like 5%, 10%, but it's not going to bring it back to what it was before. Like that's just gone now.
Yeah, I believe there's been there were polls going around. The overwhelming majority of Canadians are in support of the foreign buyer ban. And like, honestly, I don't see it changing. They'll probably let it expire till what, the 2027, and who
Yeah,
knows if they'll modify it then.
yeah,
But funny enough is, another province has taken BC's lead, right?
yeah. Ontario wants to do it as well. Which I mean, again, it is BC, Vancouver, and it's Ontario, Toronto. Like it's a very easy story to see. Like it's the developers want it, and I mean, it depends on how deep their pockets are and who they're going to be able to schmooze and give money to. Like I mean, it may get pushed through by them that way.
Yeah, but man, optically, it would not look good for
Yeah.
for
I mean,
the
optically,
public.
like right now, does anything look good? I mean, pretty much. I mean, is Carney even dealing with Trump right? And like, do we even know if like tariff talks are happening? I mean, like the optics for just all around politics just look horrible right now. I mean, if you were gonna do any changes, like you'd want to do it now because it's just a shitstorm all around.
Yeah, I mean, we see it, we understand the idea behind it, but it's never gonna fly. As like, I could tell you this from like, just, I'm not, like, hugely political. I mean, I could get it, but I'm like, I hardly see it happening. Like, you're wanting the reason that, like real estate is out of control to come back in, because just to line your coffers, because it's not profitable for you anymore. Well, I think maybe the general public would say too effing bad. Like, if you're gonna bleed, then
Yeah.
so be it,
Yeah,
right?
exactly.
So,
And that's, I mean, that would be, it's about the same political suicide as like trying to tax people's principal residence. Like that's pretty
oh
much
yes,
what it.
yes, yes, yes. We have another landmark BC Supreme Court ruling. Do you want to talk about it, Alex?
I'll talk a little bit about Alex. I've seen like the news on it. I don't want to dig too deep into it because I haven't dove into like the actual like the courts of it and everything. But this is going around the news for everyone. The BC Supreme Court has delivered a precedent-setting rule on land claim that was brought forward by the First Nations after a multi-court battle. This was four of them, and that what the Supreme Court has done is delivered a precedent-setting rule on land claim that was brought forward by these that they've actually saying that they get the land. Like it is their land. The people that owned it before was, what do we have in here? We had I think it was federal land, Crown, BC government, the Vancouver Fraser Port Authority, the city of Richmond, and then a couple private third parties, which I don't know. And that's saying that they're most likely the federal government is going to have to give this like some of this land back or all the land back to them.
Yeah, either that or, at the end of the day, it's probably they're all looking for money, right? And I was reading a bit of the article. The initial land claim was, I think, the um, First Nations. It was back in the 1850s, I believe, and um, yeah, I mean, some pundits or experts are saying that they may have to transfer some of the land back or compensate them for financial benefits that they got from these lands. So,
Yeah, no, now on this, like this is where I would actually love to talk to someone on a title insurance about this. Like that would be super interesting because when you buy land in Canada and everything, there's title insurance, and it's mainly for lenders because they want to make sure. And it was brought from the U.S. Kind of as a money scheme here in Canada. But like you would think, like if I was the owner of that land and I had financing on it, I'd be like, I'm going to title insurance. Like they're paying this bill. I'm not paying it because hey, this was my land when I bought it. I didn't know that there was anyone else's rights tied to it. That's not what I agreed upon when I bought it.
yeah, exactly. I mean, this is huge because it's basically saying that the system that we're on, that we think as our safety and security of buying land in BC, it's almost saying that's no longer safe anymore. The system is
Well,
on
yeah,
shaky ground now.
it's meant to be fee simple, like, and that's where when you buy land right now, like there is certain things like there's crown land, and then you have like the railway. Like I own land, like the queen. It's not the queen anymore, but the king could run their railway, and it's like, hey, I agreed upon that buying, but there was nothing in it about, hey, what if there was native land on there? Again, if you agreed upon it when you bought it, hey, that's on you. But how is someone able to come back after and say, "Hey, that was actually my land"? And that's not how our system has worked in the past. And like we said, that it's like, well, that's it's just making a precedent that could be scary.
Yeah, and especially they were saying that this is the first time a First Nations group was suing another First Nations group. They were fighting each other. This is the first time.
Well, I mean,
Oftentimes
they used to fight for their land back in the day, and now they're
yeah.
fighting on that. And that the main thing for me is I just want to dig in a little bit more of like knowing what was on the title, what was on the ownership rights to figure out, well, was there something on title that like this other native band had rights to it and just like didn't get like the actual like property they want. That's the stuff I want to know before I start going like, whoa, this is crazy. If I own land, does that mean, what if Alex says, well, my family moved here in the 1900s, they put their first cottage right there, that's my land.
Yeah, I mean, it almost puts our system in jeopardy. Like now, this Supreme Court declaring Aboriginal title over private lands in Richmond. This land also overlaps, port terminals, warehouses, and including one operated by Amazon in Richmond. So this is like the only thing that's really winning here are the lawyers. They've been making millions of dollars in legal fees on this.
And
So,
I mean, if
uh,
this goes through, like every lawyer, every law office is going to be going to their when precedent gets set is they start looking for the exact same thing like this for other ones, and that's where suing just becomes massive. And hey, it's hey, okay, well, we won't sue you, but you owe us a bunch of money, or we're gonna do this.
Yeah, I mean, let's hope it doesn't affect the land that we buy, Alex.
I mean, it might be time to sell it and go move somewhere else. That I mean, lots of other countries like you don't actually own land; they're all leases. Like it's that's. But again, this is how ours was set up. Is that you're meant to own it; it's yours, and that's where you can get things to protect yours. Like it's really big in Ontario, and we've seen how it says if you don't have a mortgage on it, if you don't have insurance, like title insurance, it's actually quite easily to steal someone's property. You can go into land titles and be like, "Hey, I'm Bob. This is actually my property." And that's where you ideally want to always leave either like a HELOC on your property or make sure that you do have title insurance, because it makes it a lot harder for someone to steal it because they also have to have access to the bank. They also have the access to the title insurance. And that's where does that even matter if it's just like, well, I can argue that, well, my neighbors, this is actually my property.
Yeah, this is much bigger than what you and I our purview and stuff, but this is big. We'll stay on this and we'll update you guys as things go along. There is a section that I want to take the time in our industry. This has been a pet
Well,
peeve
maybe
of
we
mine because
I think we should start this out because it's called as we're gonna call it Alex's pet peeve corner. So I mean, this is your week, Alex, and then maybe next week will be my week.
awesome. We'll give that to you. We need to have some sort of like audio that's like da da da. This is my pet peeve. Okay, I've recently did a deal involved crypto, and crypto. How long has it been around, Alex? Crypto in
I,
popularity, five, 10 years,
think like
maybe.
2000. Oh, in popularity, like 10 years. But I mean, I remember working on the Portman Bridge, and I had a guy that was telling me about it in 2010, saying like, Alex, you need to buy this Bitcoin. It's like 32 cents. And he made like 200,000 off it. I'm like, you're freaking crazy, man. Like, I ain't buying into that. And so, I mean, Vancouver was one of the hubs that you could go in. They had like a Bitcoin machine back in the day. I think it's been around for 15 to 20 years ish, but mainstream like 5 to 10 years.
Yeah, I would say maybe crypto has really gained popularity during COVID when
Yeah.
we were all stuck at home. We were all like, okay,
Even like
investments.
what is those the NFTs? The what
Oh yeah, yeah, not non fungible tokens, right?
yeah, like that
Where
was
you
crazy. People were buying pictures for $1 million, and it's like,
yeah,
what the hell is that?
okay. Now here's my pet peeve. As popular as crypto is now, like, and hey, I have some investments in crypto, not much, but I have some investments in Bitcoin and Ethereum. Not to run away with, but hey, everyone's doing it, so let's jump on board. My big pet peeve is why is our industry not recognizing it as a valid liquid asset? So liquid asset meaning cash, like a GIC, mutual fund, RSP, anything that we can use towards a down payment or in some cases net worth. Why? Right? Like now I understand that the history behind crypto being originally thought as a haven for money laundering, right?
Yeah,
But I think times have changed, right? Don't you think, Alex? Like you probably own
yeah. I mean,
some
I
crypto a
bought
little
into
bit.
it a
No,
little bit. I bought into
yeah,
a little bit, and it never again. I don't get into FOMO. It's so like I tried it and it didn't really go for me. So I'm like, all right, I tried it. I'm not going anymore. I mean, it's always like, oh, Bitcoin's down, I could get back in, but like I just I don't
yeah,
go into that FOMO. I could buy into it and it's just gonna crash. And so
yeah,
just stay away from it.
yeah. I've bought into a little bit of it. It's not a huge part of my investment portfolio, just a little bit of it, right? Now I understand that financial institutions don't recognize crypto as because of the whole money laundering thing and all that, and a lot of these crypto, I guess, houses, I guess, where you buy them at, they're sitting in digital wallets. And in our industry, um, we require history with statements and some sort of paper trail, right? So and I can understand that, if it's in a digital wallet, there's no history or statements or anything, I understand it's a no-go. But the crypto space has kind of evolved now. Like recognized institutions have gotten into it. Like for instance, one example here is Wealth Simple. We all know Wealth
Yeah.
Simple is a like institution, right? That everyone's recognizes. A lot of people use. A lot of my clients use it as well. Now they issue monthly statements for crypto.
Yeah.
Tracks all your transactions going in and out, just like any bank account, right? Any TFSA or anything like that. If that's the case, why not accept it? Alex, can you tell me why? I don't know why.
It's again, it's my the reason why I hear from the banks is it's to do now that one you can track it and everything. Again, they don't know where the history of that like the coin came from. Like what if one of them was owned by a terrorist and stuff? And so that's where they have it in their like banking whatever. It's they can't have anything to do with it. And so for them it's a bigger risk because it's like, well, what if you found out that actually was what if that was terrorism money and everything? I mean, hey, people, everyone, we know the banks are freaking funding terrorists and stuff. Like, but again, it's they need to make it optically look like they're not so they don't get in trouble.
I don't buy it, man. I mean, I think banks need to get with the times. I mean,
Now, again, Alex, the reason
like,
also why
yeah.
is like they want to be able to control it more. Like the right now, their systems can't like their systems aren't don't like you can't go to TD and buy Bitcoin. You can't buy like crypto or anything. So like that's why they're also probably leaning is like, oh well, you can't do it, which is the same as I have banks that sometimes will say, hey, well, no, your first home savings account is with Wealthsimple. Yeah, we won't look at that for a down payment. It's like that's not right. This is a statement, but the banks they try. I think it's like they're trained to kind of lie and say, "Oh, well, you need to do it with us," and that's where again they can't sell that stuff right now, and so they probably want to try and scare people like, "Oh, you got to invest in stocks, keep your money in the bank."
Oh man, I think it's just a bunch of hogwash. I mean, just like how in our industry, it took a global pandemic like COVID to finally adopt e-signatures.
Yep.
Like, I mean, in real estate, they've been doing it long before us, and we've had to meet clients face to face and get pen to ink for documents. Finally, when during COVID, we're able to adopt e-signatures, and thank goodness we're able to do that. It makes our business more efficient.
Yeah.
Financial industry, banks, everyone in the finance, let's get on board. Let's accept crypto as a valid liquid asset down payment as long as we show a paper transaction, just like how you do. Like, you know what? Get with it. I mean, our industry is a
Let's even
little archaic. We do need to
Let's
get with the
even do this,
times.
Alex. Let's actually make it so when you want to print your statement off, it shows your name and it shows your account number. Not and the way banks do this because they want to make it harder for me move to bank, especially with mortgages, because we have to show who has the ownership of it. And if you try and print something off, let's say Coast Capital, all it shows is the member number. Doesn't show anything else. You have to go and get your account summary and they will not print it off. Same thing with RBC. They'll print statements that has nothing on it. And it's like in their policy of, hey, you have to come into the bank, then we'll print it off for you. Because then they can say, oh, why do you need that? What are you going to go and do?
And then they're going to try to, steal you or try to save you and all that stuff. But that's my pet peeve for this week. Financial industry, get with crypto and accept it as
I like
valid
it.
liquid
Yeah.
asset. All right. So before we finish off, there's a couple of strategies there that are going on in the market right now. We know that listings, there's a ton of listings on the market, and we're starting to see people starting to pull listings from the market because they're not getting the sale price they want, or they're not even getting any action. I have some family members doing the same thing. They put their condo on the market, and it's an investment condo that they just bought too. And I'm like, oh man, good luck. So here's a couple strategies. Now, this doesn't apply to everyone, and it'll apply to few people, but just keep in mind if this fits you, talk to us, okay? So now this situation here, the first one is if you're in an upsize scenario. If you're a young couple or you're looking to upsize, you need more space, you're living in a condo, and hey, you got pregnant, you're looking to expand the family, you need more space. Now, you want to upgrade to the townhouse or the detached house, but in order to do so, you need to sell the condo first. The problem is, can't sell it because there's like 50 other condos that are the same as yours and nothing is selling. And if you do need to sell, you're going to need to drop it like pennies on the dollar. You have to sell it for like, 100 grand less for what you think it's worth. And that might affect your numbers. Now, here's a strategy here. Now, two strategies I'm going to talk about is it does involve deferring the sale. The first one here is instead of trying to sell it or having to sell it for a deep discount, if you have enough equity in the property, pull equity out of it, refinance that condo, and use that funds as a down payment for the next place. Now that way, the next place you can get a discount because whatever you're buying is a great deal today, the townhouse or house, because especially Greater Vancouver, GTA especially, the markets are down, you can get a great deal. In the meantime, you turn that condo into a rental in the meantime, and then sell it in the next year or so when conditions improve and you can sell it for more and faster. That way you get the best of both worlds, a discount on the purchase and deferring the sale till a later time. Now, two big caveats to this scenario is A, you need to have enough equity in the condo. If you bought that condo during the heights of COVID only a couple years ago, you're likely not going to have enough equity because prices have come down. You probably just put 20% down or even less. So it's not going to work. If you bought the condo probably pre-COVID, before the run-up, or um, you didn't get it over your heads when you first bought and you put a large significant down, or you paid it down, you have a lot of equity. That's the big caveat. Now the second biggest caveat is not only do you need to qualify for the larger mortgage on the townhouse or the house, you need to be able to qualify to keep the first place as a rental, because it's not a one-for-one thing with the banks. Like, let's say your place can rent for $3,000 and your mortgage payment is only $2,500. It's not a one-for-one thing. Like, it's not a complete wash like how you see it. The banks don't see it the same way. It's probably they count maybe 50 to 75% of the rental income, and you need to be able to qualify to keep it. But if
And
those
every
two
lender,
scenarios are
again,
exact, yeah,
everyone is different. Some are like, you start at, I always like to show, like, hey, at this bank you qualify for 500K, at this bank you qualify for 700K, at this bank you qualify at 800. Like, there is a large difference. Every lender is not built the same, and
yeah,
that's where you want to see those options.
yeah. So, but if the scenario works and if the numbers work, consider that option. Instead of pulling your listing off the market, hey, let's see if we can use this equity and to be able to buy the next place. And I'm currently doing that with a client right now where she is having a hard time selling. So she's mortgage free on the condo. So we're just taking equity out of the condo, buying the next place and converting it to a rental, and it's working great. Okay.
Yeah.
And we also say that the best time to upgrade is in a down market, because sure, your condo, it might lose 50 grand from the peak or whatever, but that townhouse or house, it's probably down 100 to 200,000. So you're gaining more on the buy because you're gaining buying power. Now, the second scenario here is in the downside situation. Now, I just said that it's great to upgrade in a down market. It's not so great to downsize because, that $2 million home in Vancouver or Toronto today probably only sell for 1.7, 1.8, right? So you're losing about 200 or 300 grand on the sell. You're only gaining maybe 50 or 100 grand on the buy. So it doesn't work so well on that end. But this scenario, as a downsizer, you're most likely retired or nearing retirement, and you're either mortgage free or no mortgage. But you are, kind of like house rich, kind of cash poor kind of thing. And you may have delayed your downsizing goals too long, especially in Asian culture. I know Asian community, they wait way too long to downsize. They don't think that far ahead. They live in their home as long as they can until their body cannot, until maybe they're forced to have to. And by then, right now, they're faced with that situation where, you know what, we're going to have to downsize. And I'm sure this situation, you're hearing it from your kids as well. They're saying, hey, mom and dad, don't sell because it's not the greatest time to buy now. It's not the greatest time to sell now because you're going to take a hit on the home sale. Maybe hang on for a year or two until the market improves. Well, that's great for us in our 30s and 40s. 1 or 2 years is fine. We can withstand it. Like, we can wait. But for our parents or our grandparents are in their 70s or 80s, and their health may be waning. That 1 or 2 years, they don't have that time. They're like, I don't know if I'm going to be here in 5 years. So that 1 or 2 years, time is more valuable to me than money. So here's another strategy of deferring the sale is take a reverse mortgage out on the home. They can borrow up to 55% of the home. So this $2 million example, they can, depending on age and property, of course, they can borrow up to 55%. So in this scenario, they can borrow 1.1 million. Use that 1.1 million. Buy that condo or townhouse all cash. In the meantime, hang on to that house. You can rent it out if you want to, or you can just hang on to it and sell it again in a year or two when the conditions improve. Now, this is the best of both worlds. Mom and dad get to move on and downsize and get that house today, get it at a discount, which is great. The kids are happy. They can defer the sale and sell at a better time. Of course, the numbers need to work. It is an equity loan, so rates are higher. You're looking at 7 to 10%, and there are a lot of stigmas behind reverse mortgages. But if the numbers work,
I want to help with that stigma
yeah, let's go. Go.
A few people on that, and like, so just for people to understand, like reverse mortgages from 50 years ago are completely different now. And like the big one is what's called a recourse mortgage and a non-recourse. If let's say if you get a bank from CIBC, you have a mortgage and a HELOC, and you finance to 1.5 million on a $2 million house, and you were able to do this because you had a lot of assets, you qualified, you wanted to go buy this condo, and home prices skyrocket down. They went from 2 million to a million, but you owed 1.5. The bank wants their 1.5. That's what they're getting from you no matter what. They're going to come after other assets. They're coming after everything. If you did that exact same scenario on the reverse mortgage, they're only coming after what the home is worth. They can't take anything else. You could have $10 million in the bank. They can't come after anything else. And that's why like they're very risk adverse and they don't own your home. Like back in the day, everyone's like, well, I talked to one older person like, well, yeah, they finance you up to 100% and then they take the home and then you have nothing. It's like, whoa, whoa, whoa. That's not how a reverse mortgage works. The problem I have with reverse mortgages is if you plan on doing it for a long time period. This is not something that's meant to go long. And the reason we always talk about compound investing, hey, put $100 in and it's going to keep growing and growing. The same thing on a reverse mortgage. If you borrow 100,000, you don't have to make any payments on it. That interest is compounding on itself. And so over, let's say over 5 years, that 100,000, it might be now 300,000. And that's why it has to be a short-term thing. It's definitely not a long-term thing, but I do think it's a really great way. And I find a lot of people get scared about it and they're like, well, I'll go just take on a private mortgage because I would just rather have a equity-based mortgage. They don't want that stigmatism of a reverse mortgage. And it's like, that just cost you a lot of freaking money. You got fees, you got higher rates and everything. It is a great tool if used properly.
Yes. Now, this exercise of reverse mortgage is essentially you're buying time, right? You're buying time so that you're waiting for the market to improve so that let's say that $2 million example, you can sell that house for 2 million in a couple of years rather than 1.7 today. And now why a reverse mortgage? Because if it's a traditional mortgage or a line of credit, you'd have to qualify it on income. Now, chances are being a senior, you're living on CPP OAS and that's it. Maybe a pension if you're lucky, if you worked at a company, a municipal or government. But let's say CPP OAS, you're making 20 or 30 grand a year. That's it. And trying to qualify through a regular mortgage or a line of credit, you might only qualify for like 100 or 150,000. That's it. And that's not going to get you anything, especially in Canada, to be honest with you. And at the same token, if you're going with a private lender, you need to make payments towards. And if you're on a fixed income at 20 or 30,000 a year, you can't afford $3,000 a month in interest payments. So that's why reverse mortgage is a viable option on this, where you don't need to make payments. Yes, there is compounding, but at the same time, average home appreciation in, I'm just saying GTA and Lower Mainland last 25 years is 5 to 8%, right? I'm not even going to use 5%. Let's say 3% on 2 million. That's 60,000 appreciation a year. Okay, that 60,000 will help offset a 7 to 9% of 1.1 million. So it is meant to be short term, but your equity will be preserved, and that's why they only go to 55%, is so that there's plenty of room. It is meant to be short term, and this isn't meant to sell you on this idea. If you're open to it, talk to Alex and myself. We can dive more into details, talk about all the objections, all the scenarios, and all that stuff. So, again, let me just recap: upsizing, look at pulling equity out to buy the next place, and if you're downsizing, also look at pulling equity out, deferring the sale in both scenarios to buy the next place to take advantage of the buy. So, if you are stuck trying to sell your property and moving on to the next place, but you can't sell it, and you're forced to decide whether to pull it and delay your plans for like a year or 6 months, consider these two ideas and talk to us, and there might be some options for you guys.
I'll tell you a cool one, Alex, that I helped a family with that did the downsizing thing, and same thing. They had some investments. The investments were down. So we're like, hey, we don't want to pull out of there. That's the other cool thing about a reverse mortgage or a HELOC, of course. Pull out, borrow from your home when investments are down. What this family did is they had a house was worth a lot of money. They went and actually bought a fourplex. So they bought it. They waited a year because they were going to move into it. They're going to move into one unit. They're going to rent the other units. That is paying for their entire lifestyle now, and they're actually making money on a monthly basis. And that's where, again, it's a tool that can be used properly. I've also had other people that got a reverse mortgage for someone else, and they're like, "Oh, I borrowed 300,000, and they spent it in 2 years." It's like, whoa, that 300,000 was meant to last you for 10 years. You bought a boat, you bought a car. Like, that's not how this was meant to go.
Yeah, yeah. Now, at the same time, when whatever you're doing, always have a financial advisor to advise you on how to manage your money as well. Okay. Our episode's gone too long. We need to wrap this up. Shanks, any other plans for the rest of the summer?
I mean, take care of my knee, but I am planned. I hopefully I can surf again here. I will take out my dirt bike and just try and enjoy some time with the family.
Yeah, same thing for myself. I am not going away, but socializing a lot, going out to dinners. Got to get some more golf and pickleball in before the days are getting short now. It's actually starting sundown at 8:30, so
Yep,
I gotta get some more outdoor activities in. So,
yep.
folks, thanks for tuning in. For those that have been following with us every step of the way, we're nearing our 1 year mark. We're almost there, and you've seen us grow from the infancy to our clunky recordings to now. I'd like to think we're a little bit smoother. So, but yeah, thank you. We just want to extend our heartfelt appreciation for following us every step of the way. We always want to provide value to you, bringing guests to educate you on all things real estate, housing, interest rates, and the economy. So, with that, on behalf of Alex Shanks, I'm Alex Pang. Thanks for tuning in to episode 50. We're almost there. We'll see you next time.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.